Hi, I'm Dennis from Accountants Desktop. Simple capital gains tax calculations can be entered directly into your tax software, so no additional resources are required. However, some calculations can be challenging and require extra work. That's where our workpapers fit in. Over the next few minutes, I'll show you our CGT calculators, which have been designed for those challenging jobs. You can use these calculators both before the event to get an estimate of CGT payable by the client, or after the event to calculate the gain or loss to include with the client's return. If you like this video, please give it a thumbs up below, and don't miss any of our future videos by clicking on the subscribe button. These are our workbooks for those challenging CGT calculations. We have one for the sale of shares and one for the sale of cryptocurrency, which is a separate workbook but almost identical to the shares workbook, the only difference being the decimal points for each unit. And we have another for the sale of property, one to calculate the CGT discount, and lastly a workbook to determine eligibility for the CGT small business concessions and to calculate the gain. This is our CGT workbook to use for the sale of shares, with some sample data already loaded. The worksheet has numbered calculation blocks, and a separate block should be used for each sale. At the very top of the worksheet, there's a summary of sales entered below, and underneath, each block is split into 5 sections. The first section is where you enter selling details. Then below that you enter buying details, including any returns of capital, for all shares held in that company at the date of sale. Alongside is the profit and loss section, showing the profit or loss for each parcel of shares for accounting purposes. It's in this section where you enter the quantity of shares sold. There's an unprotected formula in that cell that defaults to the buy quantity for that parcel. For partial sales of your current holding of shares in this company, you have the option to reduce the quantity sold from any parcel based on their cost per share to maximise or minimise the gain as required for the client's particular circumstances. An error message will be displayed at the bottom of this section if totals for quantity off and quantity sold do not agree. The next section is the capital gains section, where you can see the type of gain, or alternatively the loss, from the sale of each parcel. And the last section shows the balance on hand from each parcel after this sale, including acquisition date, quantity and cost base. In this section under status, select either sold later this year and copy and paste the balance details to the buy details section in that latter sale, or select on hand at 30 June, and the details will be transferred to the holdings at 30th June sheet as shown on the screen. This is our CGT workbook to use for the sale of property. There are specific calculations for the following components of the gain or loss. Capital proceeds, after reducing the sales proceeds by the market value of depreciable assets included with the price. Reductions to the cost base, to account for capital works deductions if the property was acquired after the 13th of May 1997. Additions to the cost base for all other costs. Reductions to the gain, to account for main residence use for any number of periods during the period of ownership. Reductions to the main residence exemption based on days and or area used for any number of periods that the property was used for income producing purposes. Reductions to the CGT discount to account for any number of periods that the client was a foreign resident during the period of ownership. And finally, an estimate of the CGT payable on sale. This is typically used around the time of sale to ensure that the client puts aside an amount to cover this liability when the return is lodged with the ATO. This is our CGT discount calculator, which calculates the discount percentage on the sale of an asset where there were periods of foreign residency during the ownership period. The discount percentage is calculated in the following situations: where the asset was acquired after the 8th of May 2012, where the asset was acquired on or before the 8th of May 2012, and the client was an Australian resident on the 8th of May 2012, where the asset was acquired on or before the 8th of May 2012, and the client was a foreign resident on the 8th of May 2012, who is choosing the market value method, and where the asset was acquired on or before the 8th of May 2012, and the client was a foreign resident on the 8th of May 2012, who is not choosing the market value. You can also use this worksheet to calculate the net capital gain by entering acquisition, sale and capital loss details if applicable, and the total number of days a foreign resident after entering periods thereof. This is our small business CGT concessions calculator, which is designed to help you determine your client's eligibility to claim the concessions and to work out the net capital gain. The workbook is presented in Q&A style so that your client's eligibility for the various concessions can be tested with simple yes or no answers. Due to the complexity of the legislation and the resulting impact on the application of that legislation, we've included the following in the settings sheet. A procedures checklist to make sure you consider each step in the process and in the appropriate order, and links to the ATO website to find an explanation of the multitude of definitions used in this legislation. Also at the settings sheet, you can calculate aggregate turnover and net asset values of the client, affiliates and connected entities, identify CGT concession stakeholders, test for significant individuals and the 90% rule, and calculate the amount available for the retirement exemption. Moving through the workbook, the first step is to test the client's basic eligibility for the concessions at this sheet. For each question, simply answer yes by entering 1 or no by entering 0 to evaluate overall eligibility. Some questions may already have been answered for you from information entered at the settings sheet, and any greyed out section of the worksheet is not applicable to your client's situation. If, after entering all of the required information, a message is displayed at the bottom of this worksheet saying does not meet the basic eligibility conditions for small business CGT concessions, go no further. Next, we go to the 15-year exemption sheet and answer those questions. This sheet will also allow you to calculate the total number of years with a significant individual. Then we go to the retirement exemption worksheet and answer those questions, and if applicable, view information at the rollover sheet. If you need to trace the indirect interest that a client has in any entity, use this handy tracing calculator. And finally, go to the calculation sheet, where you can make choices in the order of claiming concessions that will give you the most tax-effective outcome. The net capital gain will be calculated. Thank you for watching this video on our small business CGT concessions. Don't forget, if you liked the video, please give it a thumbs up below. And don't miss any of our future videos by clicking on the subscribe button. My details are shown on the screen, so please feel free to contact me for any further information.